And that means we are now live here on our YouTube channel. It is Monday, first trading day of the week, 3/29/2021. And it's our halftime report, our daily show from Tackle Trading, that whenever the markets go live, we go live, analyze all of the charts, the news, the information, break it all down for you guys, give you some insight so you can better run your daily routine out there. Welcome out, everybody. I got a fun show planned for you today. We're going to do a little, sector roundup, middle of the show. We're going to look at all the markets one step at a time from a top-down perspective. We've got upgrades and downgrades from some key names on in the marketplace. And there's some big news actually over the weekend trying to pinpoint exactly what was happening around some of the volatility in the communication sector in certain Chinese stocks. We'll talk a little bit about Archegos capital management and some of that wind out in the financial sector as well. And then, as always, as we've been doing here for a couple months on Mondays, we're going to do some trash that makes cash later in the show. I got the regular crew with me here today. Let's start with Matt. How you doing today, sir?
Doing good, Tim. Excited to be here with the crew.
And Marky, how are you, sir?
I'm doing good. Listen, has Bitcoin crashed? If it not, then I am very happy. So Bitcoin, oil, and reopening, those are the three areas I love in the market the most. So
absolutely the opposite from Bitcoin. It's rallying here today, pushing towards its resistance zone after a couple of weeks of consolidation. We'll break that chart down, but it's been resilient, no doubt about it. And the market's actually been resilient as well. Maddie, I looked at the Bitcoin chart today. One of my first thoughts was, man, that thing is just such a juggernaut. They cannot bring it down for too long. Any thoughts on Bitcoin while we're on it here?
No, I mean, technically, you got a little bit concerned last Thursday when you violated the 20-day moving average for the first time in really quite some time on a close. Hadn't really closed underneath that level for some time. That violated some degree of pattern you were looking at, but you were never, in my opinion, you were never looking to gobble up this dip. You're really lining up for a potential breakout. And so, this is a positive day for that potential breakout to occur. But outside of that, I don't see a technical trading trigger here.
Yeah. There's some good news around Bitcoin. We'll get to it a little bit later in the show. Visa, some more corporate adoptability type of chatter that we can keep hearing from a lot of these fintech firms, financial firms as well around Wall Street. But let's start with the broad markets, Matt, if we can. Let's start with the S&P 500, kind of some of the price action. It's an interesting chart. It's an interesting, kind of condition in the markets here as we head towards the end of March. We're not in earnings season. We don't have big themes really driving us right now until we kind of get more clarity on infrastructure or as we start to get into earnings, but we still have held up very, very well. And in fact, price response on Thursday was strong, good, strong hammer candlestick, carry through here on Friday. And then the close on Friday was really impressive. Here today, we're kind of hesitating right at resistance. Just from a technical perspective, what are you seeing in this chart, Matt?
I'm seeing the market hovering up against a potential resistance breakout, and the market response on Friday was extremely positive in most of the broad market, but you really didn't break out here in the broad market. You really kind of just hovered against that breakout channel, and then a little bit of hesitation here. Mark, what's your read technically?
Well, I mean, it's respecting resistance, right? Like, it's like you have that big day on Friday, and I love the Friday ramps. Even if we have to deal with problems the next week. I mean, you had such a massive close on Friday, huge ramp up, but you ramped up right into resistance on the S&P 500. So, and from a technical standpoint, when you do this long enough, you learn to respect resistance, you learn to respect support, you learn to respect technical analysis. And so when you have that nice ramp up into resistance, you're excited about your existing positions, right? But you're right there at resistance. And so just wait for that confirmation of that higher price, right? As we were talking, you're looking at Bitcoin, ramp up into resistance. Here you had the market, nice pivot on Thursday, ramp up on Friday, but, respect resistance. And, and I know Matt is a huge top-down analyst. I'm a huge top-down analyst. Like, I base so many of my trading decisions on what is the broad market doing? And when the broad market is on the cusp of resistance, I have learned over time, just be patient for that new trade as a top-down analyst. Be patient. Let the S&P push to those all-time highs, or highs if they're not there. We're at the all-time high resistance zone right now. But let it break resistance. Let you get some confirmation before you get too excited about new trades, and it's just respecting resistance will treat you very, very well. All you have to do is be a little patient, and that patience can save you a lot of bad positions, just waiting for a little additional confirmation.
Well, you mentioned the top-down approach, Mark. Yeah, you and I love the top-down approach to the market, really kind of analyzing the S&P, looking at the sectors, then going to the individual components of those sectors. And when you're looking at, we're going to play trash later on today, Chuck. And most of the time when I go to look for a pick in trash, honestly, I'm looking at the S&P and I'm saying, okay, where's the S&P in relationship to support and resistance? Then I go look at the sectors and say, okay, which one of these sectors do I feel is going to break out this week, right? From a technical perspective. You take a look at materials. Materials is breaking out here on Friday, showing a little bit of defensive nature above the breakout channel on Friday, or excuse me, today. Materials should be an area of the market based on the price action you're seeing that you're looking at this week. And so when you're looking at, say, okay, let's go find a stock underneath $5. Well, you might want to look at materials this week, given the fact that the entire sector is breaking out and a lot of that trash, quote unquote trash, is going to be carried up with the sector performance. When you look at communications, you're probably shying away a little bit, given the volatility that's happening in, the DISCs and the Viacoms and the, those areas of the market that are getting caught up in the volatility of that hedge fund that's, currently imploding in front of our very eyes. So you might want to shy away from comms. Energy, we're trying to figure out exactly where this deep retracement is going to confirm. I like it, you like it, a lot of people like it, but we still got some technical resistance at 50.85. We've got to navigate there. I might want to see that broken out before we start continuing to see that price appreciation going up. So when you're looking at the top down, I just feel like it helps you. It clears up so much mud in the marketplace by allowing you to see, okay, where is the money flowing in the marketplace, and how is that going to bring up the to a certain extent the underbelly, but it's the rising tide theory, right? If materials breaks out, it's typically going to carry most of the sector with it. If comms is running on the backs of, DISCA and Viacom for 3 straight months, is probably going to, hold up a little bit of the other areas of that market. So the top-down approach to the market, or top-down analyst, it just helps you clarify. It helps clear up so much potential cloud out there. It helps you understand where to focus on in the marketplace as well. I love it. You love it. I think many people love it.
I mean, because you can't do every trade, right?
No, of course
there
not.
is. And so, like, you can't do every trade. You got to pick your spots, and that's what, and you got to decide when to allocate money, and that's why, like, analyzing the markets from a technical perspective, broad market, sector, industry where applicable, man, it just helps the whole decision making process.
Well, and let's clarify exactly where that breakout channel is in the broad market. We're looking at a 30-minute chart here on the S&P. You're seeing about 2 weeks of data here. You're seeing some chop here, no doubt about that. Last week was very volatile on the intraday charts. Not a lot of clear analysis last week on those intraday charts. But I'm looking at this zone that you can see between 39.60 and 39.80. You got that zone that you're threatening right now in the market. The market's picking up a little bit of steam from the cash open here, threatening out of that potential breakout. And Mark, I talk about multiple time frame analysis quite a bit. You can see this starting to get clear real quick if we can get above this zone right here, 39.60 by 39.80. That's the intraday zone that I'm looking at. You bring that out on an hour chart, you can see it a little bit more clear there. It smooths out a little bit of that data. Coach Frank over there at Tackle Trading, he loves this hour chart. It helps him smooth out that intraday data. I like to look at a little bit more of a 30-minute chart to see a little short-term movements that Frank doesn't like to see. But you're going to see the same zone, 39.60 by 39.80. We break out of that. Once again, you break out of that, You should have some clear selling to the north. The only concerning number is 4,000. But again, we've played this song in Nan's routine. You break out of that, 4,000 is going to see some chop, but it should break out. So keep an eye on 3980 as the top level resistance. The band is 3960 by 3980, in my opinion.
And I did love that intraday chart because it really does tell the story of the last few days in the market. I mean, we ramped on Friday into the close, and that kind of set up this, over the weekend trade to kind of come into Monday. And then here at the open, the markets were selling a little bit of pressure in the futures market. It did not, exhibit itself into something further, and markets are now rallying into these resistance points you guys are talking about. Yeah, I mean, S&P is healthy still, and we kept a rating of 25 yards on the SPY for that reason, but it's not the only story in the market. And I love what you guys are talking about. The sectors do tell a lot of the story. We'll go through those in here in just a minute, but I do want to look at the rest of the indexes as well, because I'm seeing some separation as we've seen over the last several months here, Matt. The Dow's looking beautiful, but the NASDAQ kind of stuck in a range, and the Russell is also kind of turning over a little bit here. Just from a quick, read on these, what are you seeing across the different indexes?
Same thing we're seeing over the course of the last couple of weeks in the NASDAQ specifically. Ever since we tried to kiss up against that 50-day moving average, you've just had this nasty chop in the NASDAQ. And specifically on Friday, coming to the technology sector, you had to be a little bit excited that you did have that powerful, response coming into the close on Friday. It carried up the broad market, but specifically here in the tech sector, you see that just, coming into that resistance with some power, gets stopped on a dime there. As you can see, that 50-day moving average playing a big role there. But when you're looking at the NASDAQ in comparison to technology, you're looking at a very similar scenario. Obviously, tech and NASDAQ go hand in hand. One's kissing against the 50, the other one's slightly underneath the 50, but you're seeing the same type of chop. You're seeing the same type of volatility. And last week, I felt like we were a little bit closer. This week, even though 2 weeks ago, I felt like we were a little bit closer to coming out of that storyline. Last week, a little bit of a chop, a little bit of volatility, no doubt about that. But I still feel like if we can recapture some of this magic above the 50-day moving average in technology and come into the NASDAQ here, hovering right underneath that 13,000 barrier, if you can break out of that 50-day moving average, that storyline that's been dominating the marketplace, specifically to the growth side, should dissipate a little bit.
Mm-hmm. Yeah, I think it.
Well, and one thing on the Friday storyline, Tim, I wasn't in front of the market on Friday. I was driving most of the day, but I was familiar with all the headlines on Friday. What was driving to the price action? I was not in front of the market during the ramp coming into the close on Friday. Caught that after the case when I was talking to you. But the storyline that anybody was talking about was just Viacom, Disca, and what's happening in comms, which comms hasn't hit that much. But it's amazing how you can see the market respond technically in the S&P, and yet the only thing people were talking about was Disca and Viacom and the volatility there. If all you did is get your take on the market from the news, I just don't even know what you would do anymore.
Mm-hmm. Well,
I really don't.
Exactly.
Like
and
Friday, the news, honestly, as a non-market participant Friday, some dude just driving cross country, I thought the market was down based on the news.
Nope, it was not.
No, it was skyrocketing.
Yeah, the market is doing well.
Yeah, man, it just gives you a different read sometimes.
It is interesting news, obviously, but it dominating the entire of your stock market analysis is obviously very silly. You got to start with a big picture and look at the indexes and all that kind of stuff.
And before we get in that news, could we go to the
But that wasn't my point. But let's move on.
Go ahead, Mark.
No, but before we get into the news on Archegos, could you go to the rut real quick?
Yeah.
I mean, because the one area of the market that's underperforming the most is small caps today, right?
Yeah.
Down a healthy couple percent, and give me a technical read on that, Matt.
You're looking at this as a little bit of a bearish retracement fighting against some resistance levels. But I do think the pattern you're looking at here a little bit more is a little bit longer term. You're looking at a lower level of resistance at this point. You're fighting against a very clear, battle zone at 2100. obviously the shine has worn off on the small caps, and now the rust is showing a little bit. And I think you do got to get a little bit concerned just from a psychology perspective. And I'm not saying the Russell's just not an area that we should focus on. I am a little concerned with the Russell in the same sense that Viacom, Comcast, Disca, violent reversals. But what was those violent reversals based upon? Those violent reversals were based upon price appreciation that was not justified. I think we can all agree with that, guys. Nobody in the world thinks Viacom's earnings have doubled in the last 6 months, and yet they're priced it. No, like
triple, quadruple.
Yeah, if you look at Viacom, and this is a stock that coming into the year had really, really good valuations, but it just went, it took on a story in and of itself. And it was almost similar to that, what was happening in the underbelly a little bit with GameStop and those other high flyers, that they became something that was not based in reality, quite frankly. Viacom is a stock I know very, very well. This is not Viacom. This is not Viacom. That's not what this stock is.
This
Hold on,
chart,
let me finish my point real quick. So when you're and Viacom's a big stock, and it's obviously not a small cap here. But when you do get to the point where you disconnect from fundamental reality to this level, you will see this every now and then. And when you're looking at the Russell 2000 specifically, the Russell 2000 simply got in front of itself a little bit. And even Coach Tyler, who I don't know if I know an individual that loves small caps more than Coach Tyler does.
Mm-hmm.
And even Coach Tyler will tell you that the Russell 2000 probably needs some time for the fundamentals to catch up to the price action. And so when you're looking at this type of price, very consistent trend, very consistent price action, gives you nice consistent dips. You can look at buying. Breakouts are consistent. You don't have a lot of concern there. But when you start to see this type of chop, and you're looking at resistance levels that now are forming on the resistance levels that are now lower highs, and you're fighting against those moving averages, and you have this horizontal resistance level at 2100, and there's, like, Mark, there's nothing out there right now. It's like, oh my goodness, like, everybody's gotta buy small caps. Like, everybody right now, go buy small caps. That's not the storyline that's being played out there. So I could certainly see the Russell 2000 taking a back seat to the other market indexes, just given the fact that, and again, I am not saying Viacom is what's going to happen with the Russell, but sometimes when the fundamental reality or when the price action disconnects to such a degree from the fundamental reality, you do get violent shakeouts. And when you look at Viacom, Mark, truly fundamentally, what has changed in the last 3 months from Viacom's price action?
No, nothing.
Because
not
literally
really,
nothing.
Right?
And nothing now has changed from a fundamental perspective regarding valuation, given the fact that Viacom went up dramatically and then came down dramatically. But you've only had one earnings report to process in this time frame. The earnings numbers didn't change the fundamental reality. And so when you're looking at this from a quarter to a quarter perspective, and you see a price action of 46 versus what it was last quarter at 31, and you're saying, okay, you're looking at the long-term price action of where Viacom is. Isn't this where Viacom should be? Like if we weren't in a crazy euphoric and like chase the rags to riches storylines, I mean, isn't this where
Hey Matt,
Viacom
when did you change to the GameStop chart?
I'm not. I'm looking at Viacom.
Oh, okay.
But again, if this was based on fundamentals, I would say Viacom has a fairly proper valuation around 40 to 50. Like, that's what I would say.
Yeah. Yeah.
There
I
are
think
so many
fair.
teaching lessons
I'm
here.
telling you, I would not say this is the craziness. This
Well,
is
they're
the
both
craziness
crazy.
we're talking about.
Yeah.
This to me was the craziness. And don't
Yeah.
get me wrong, I enjoyed it. You enjoyed it. We all enjoyed it.
Mhm.
But let's not get all worked up with Viacom being at the same fundamental price it was 2 months ago.
Mhm.
I mean, there's a couple lessons here. On the way up, that 9 EMA did not break for months. Janet held strong on the way up.
And what does that tell you, Mark? Who's driving that price?
Algos.
And who drives algos? Hedge funds.
Funds.
And who's driving price today? Those hedge funds that got blown up because of it. They over leveraged themselves. We can get into that down the road. My point is the fundamentals haven't changed. The only thing that changed was price action over the last 3 months.
Mhm.
My perspective on, if I was looking at Viacom today versus 3 months ago, I'd have the same take today that as I did 3 months ago. It's a fundamentally solid company you can invest in, park money, and you can write cover calls against for the rest of your life.
You know, and one point you said something there that triggered, and I think it's a really important storyline in the market right now. You said something like price got ahead of reality, something like that. Isn't that how you phrased it?
Price, well, I say it a couple things, but price got ahead of fundamentals.
Yeah, you know, and while the
fundamental
broad
reality is what I said, Mark. Price got ahead of fundamental reality.
while the broad market over the last week has done all right, right? That doesn't tell the story of a lot of the underbelly and the hot stocks. There has been a relentless assault. Like if you go to the Kathy Wood type stocks and you pull up ARK, ARKK, you know, ARKK, double K, you know, you see a lot of those popular stocks in this type of pattern. Didn't have, in fact, had a brutal week last week. While the broad markets did all right, while even tech did all right, the ARK stocks had a brutal week with that, you know, underperforming again today. If you go to the SPAC index, SPAK.
That's a thing that I didn't know about.
Yes, that is a thing you didn't know about.
Interesting.
Once again,
it might have been a thing I still didn't want to know about.
Markets did okay last week. SPACs got obliterated last week and sitting tentatively on a support level with not a lot of support underneath. So the markets, it was a brutal week for the hot meme type.
Okay,
stocks.
so basically last week was a fundamental reality checkup. Basically the SPACs come down to a fundamental reality of we don't know what it is yet. You know, and Viacom and Disca come down to where they were before they run up. I mean, that's how I'm seeing this, because I'm not seeing this as a violent shakeup in the rest of the market, guys.
No, and I see in the rest of the market, no.
I'm seeing this as a story that's playing out in its very specific industry, and I think that's actually a good thing for the marketplace.
Yeah, things that have gotten, I mean, things that have ran up good. I mean, you go to EVs, like go to NEO, for example. So many of these stocks that were hot, the stocks that, you know, made people a lot of money in 2020. They had brutal weeks last week.
Yeah, a lot of meme stocks.
You know, the markets, and there was really a massive separation between blue chips, if you will, major index components, if you will, and a lot of the favorite retail.
Can I ask you a question then, Chucky? So we've seen it. We've seen a shakeout in this area of the market, right? I don't want to call it the underbelly, but it's kind of the underbelly a little bit. You know, but it's more meme based.
Mm-hmm.
Oh my goodness, I kind of hate the market in 2021. I want to go back to 2000. I just do sometimes. But okay, so the meme stocks, right? We've seen a little bit of a violent shakeup in the meme stocks, but we haven't seen it really shake up the broad market, right?
Correct.
Mm-hmm. Correct. Yeah, the S&P literally is pushing all-time highs. So
maybe we're used to it and we don't overreact in the rest of the market the same way we did when we had the GameStop fiasco. Because the actual market cap of Viacom versus what happened in GameStop, it's a bigger storyline market cap wise in Viacom and Disc and those than it was in GameStop. You have more market participants, you have more hedge funds. It's actually a bigger financial story than what happened with GameStop. But we're kind of used to it now. Maybe we're not overreacting, and I'm taking that as a positive.
Mhm. And why don't we give that news right now? We've been talking about it, obviously referencing to it, but let's go through the specifics of it because it's not just Viacom that got swept up in it. And I do think it's really, really good sign that it's in that pocket of the market, not pushing around the other sectors and all that kind of
Well,
stuff.
guys, just real quick before you do give the news, Tim, look at the volatility of Disca, look at the volatility of Viacom. I mean, just getting just violently shaken out. You look at those weekly charts, all of them are coming back down to where their 200-day moving averages were. I do have a couple questions there on Mark, but again, comms, look at comms, guys.
Holding up.
Okay, and that's why I say when we were dealing with the GameStop fiasco, when the unwinding of the meme trade, I don't even know if anybody has clicked like that before, but the GameStops go up, and then it unwinds, right? And it just gets absolutely just butchered. Those unwinding, that was pretty violent when it was GameStop, and everybody in the market was talking about it. And we were having congressional hearings on it. Viacom unwinding brought comms down to the 90 EMA on the weekly chart. So you are seeing it, unlike we were when in GameStop when it was impacting almost everything. These storylines are now just impacting specific sectors. I think that's healthy for the marketplace itself.
Mm-hmm. Well, and it may impact individual
or maybe we're just all
companies.
sick and tired of those storylines.
We don't usually process them the way we used to.
Either one. I know I'm sick of those storylines. So maybe we're just a little bit more used to these happening. But again, fundamentally, I mean, nothing really has changed.
Well, and let's flash through a couple of companies. Viacom, Disca, you did look at.
Yep.
There was a couple other that got swept up in it as well, Matt. Take a look at Baidu, which apparently this one firm, I had never heard of the firm, but Archegos Capital Management, they're the one in the news right now. They were the ones overloaded and leveraging big on some of these names that we've just gone through. Viacom, Disca were two of them. Baidu was one of them. Well, the VIPs, actually, VIPS was
another
heavily traded company that they had. It got beat up on it. So some of these individual companies from forced liquidations on Thursday and Friday, this company just had to dump, Matt. I mean, they had margin calls. They got over leveraged. They were too greedy with the way that they were running their capital, and they had to dump these companies.
They got over leveraged buying stuff with the market at an all-time high. Think about that one for a second, guys.
Yep.
They got over leveraged to the point where they are blowing up their portfolio with a market at an all-time high. The level of stupidity, idiocracy.
It is fascinating. I didn't think of it like that.
Irrational thinking, pure unadulterated greed that it takes to do that. These people had a fiduciary responsibility to their clients, and they put their own greed in front of that. It's shameful. It's disgusting.
I mean, you think about it. It's not like they got liquidated. I didn't think of it like that. It's not like they got liquidated. Market collapsed 30%.
They lost, Mark.
They literally at the resistance zone of all-time highs on the S&P 500. They blew up their account.
Guys, we're being against the all-time high. They blew up their account.
That's a special gift.
$20 billion.
But it goes to show.
Oh,
and there's this
Mark,
lesson.
Hold on, Mark. Not only that, they blew it up in a week.
Yeah.
In a week.
1 week.
Hold on. They blew up a $20 billion fund in a week with the market at all-time highs simply because these individuals were chasing greed. And I hope that is a very, very big reminder to everybody, new trader, old trader alike. Treat leverage with respect, and if you and to make sure that your portfolio is diversified.
Yeah, it's just a lesson for the ages that will be referenced for decades to come.
This story has nothing to do with anything other than pure and unadulterated greed. That is all it is.
Well, and from what I'm understanding, he was also going, the one trader who was running the fund, he was going to different banks to get leverage on leverage on leverage. Like he would go to Credit Suisse, he'd go to Goldman Sachs, he'd go to all of them.
Okay.
Yeah.
Oh, wait. Who? Let's name those. Deutsche, Credit Suisse, and Goldman. Oh my God. Yep. They went to the three of the four horsemen.
Three horsemen of the apocalypse. Is that, yeah,
Lord.
it is a reminder on leverage and excess, margin
You know who
use.
they
There's no
didn't
question
go
about
to,
that.
Tim? The local bank,
They didn't call up
because
their
the
credit
local
union.
bank wouldn't have loaned them the money.
That's right. That's
They
right.
went to Credit Suisse
That's
and
right.
Deutsche and Goldman.
Well, it's a story. We'll see how it plays itself out. It's interesting as we're talking here. The S&P literally is pushing towards its high, on the internet.
Guys, if you're blowing up your account with the S&P at an all-time high,
Mm-hmm.
you got some psychological issues you need to work through.
Mm-hmm. Yeah, I agree.
That's tough to do.
I agree. Let's move on. Let's kind of go through the rest of the market here. Quick commodity roundup. Then I do want to take a look at some of the sector upgrades and downgrades we did over the weekend at Tackled Trading. Marky, crude oil, gold, the dollar. Let's kind of work through those one at a time. What are you seeing in crude first?
Well, listen, we're stuck in a little range. We're right up against resistance right now on crude oil. This has been healthy price action. I hated the Suez Canal storyline. As an oil bull, I'm a big believer in what's ahead, economy reopening, OPEC, backing up oil. I just think it has this great position storyline for the next 9 months. And then the Suez Canal comes along and it's like down day, up day, down day, depending on the news of that. And it was just like silly. It was just silly. I'm glad that for both real life, there's a lot of people happy that transport might get running up and again. But for oil, getting that storyline in the background, getting back to what I think is a good fundamental story for oil moving forward. But you're up against some short-term resistance, right? And you are developing a broader range, about a $10 range, roughly between 57 and 67. And if you don't think oil can trade within a $10 range for a long time, you have to go all the way back to 2019. And when it traded within a $10 range for about
60.
9 months,
Yeah.
about 9 months. So it can trade within a $10 range for a long time, which would be wonderful for me because I think that provides a really positive backdrop for energy stocks.
If it does roll into a neutral range, obviously it can stay there for quite a bit. If you know crude oil's history and personality, Mark, like you're talking about, you can go back and look at the charts and confirm that. It's an interesting chart though, right here, Matt, just from a technical perspective, because volatility picked up. We respected it. We downgraded crude on that last week. But then this last week, that was 2 weeks ago, was from my reference. But then red candle, red candle, green candle, a lot of back and forth as it's trying to fight on this 50. Do you see anything here, Matt, that's grabbing your attention outside of just shift in volatility? Anything on that chart?
No, but I haven't been interested in crude since like here from a directional perspective.
Mm-hmm.
So there's nothing that is exciting me here from a directional perspective. That's not my take. But I do agree with what Mark said. It's to me, it's more about the stabilization of this crude chart and the average price of crude going up over time and how that impacts energy stocks. That to me is the only thing that I care about when it comes to crude. I like to, and I even said this many times in the face of our discussions here on the halftime report. Y'all need to learn when the trend's over.
Mm-hmm.
And I've said that about crude for now a month. So I don't have any interest from a directional perspective on crude here. Maybe after some degree of consolidation, and when I say some degree of consolidation, let me be clear, I'm talking more about the mark level of consolidation for 9 months and then seeing a breakout. I think from a crude perspective, you're looking at this from a cash flow perspective. In energy stocks with naked puts, recovered calls, or obviously bull puts. Bull puts if you know how to do that in the actual crude market. But from a directional perspective, again, for me, it's more about XLE than it is about CL. And if that average price of crude does go up over time, which it currently is, and then coming back to this crude chart, seeing that stabilization, we haven't seen the stabilization. You're still in the same type of volatility. Yeah, we're all kind of sick and tired of the Suez situation. Mark, I did see a funny meme on Twitter the other day. It had Trump over it was one of those fake Trump accounts on Twitter,
Mm-hmm.
everybody knows how those work. but it had a picture of the Suez Canal and the ship container in there, and it says, "I would have just blown it up. Do you miss me yet?" and there for a second, I was like, yeah, kind of. I would have blown it up too. Get it out of here. Let's go. But no, to me, that Suez Canal situation was just an extension of the volatility here. So I don't see a shift in volatility here because I see that shift in volatility over here, and the Suez just being a story that fits within this pattern. I don't see that. And again, I can certainly understand somebody who does, that canal situation was kind of in this range right here. You caught up in the volatility, no doubt, but I just think that was a storyline in the volatility and didn't start the volatility. So no, I don't see a shift in volatility here. I see the continuation. To me, once again, love this price action here just from a stabilization, because you want this to stabilize if you're doing like a lot of people are looking at this and saying this is going to catch up to what this has been doing. So to me, it's more about stabilization, average price over time, and how that impacts energy stocks than it is crude itself.
Yeah, in that energy sector, I think a lot of people are excited about it. We'll take a look at it a little bit further here in just a second. Gold here real quick, Mark, then the dollar. We'll talk Bitcoin, and then we'll go into sectors. Gold still kind of hanging out down here. It's at this pivot point. It's been fading back a little bit from that pivot point at 1750. What's your read on gold right now, Mark?
I don't know. Like, I know we got a support level that was tested a couple times, and a known support level back in the early part of 2020. It was tested multiple weeks. It was a nice trading range. And you came down and stuck the landing a couple of weeks ago, right? Stuck that landing, tested again the next week. That's a really healthy sign. If we come back and test it again and it sticks again, I'm really, really interested on an upward confirmation candle. I'm also interested if we break this short-term resistance that's been established over the last few weeks, basically the last month. And so there's a couple things in which I'm very interested in from a technical, and it is pure technicals. I still believe in the fundamental picture of gold. Read a really nice article by Jim Rickards, made a case gold win-win either way over the weekend.
But he's made that case every day of his life for the last 40 years. It's another day that ends in a Y.
But but right now for me, it's all about technicals on gold, because, I've had fundamental theses that didn't work out before, it wouldn't be the first time. And so for right now, it's all about technicals. And so I need to see either another sticking of that support zone and then upward movement, or breaking of the short-term resistance, which would coincide now with the 20 weekly getting above that. So I need to see something, and you're right there in the middle of that smaller range right now.
It's going to take some time.
And I'm cash flowing existing gold positions, obviously, as I have been for months now.
I'm interested in GDX. Talk me out of it.
Can't. A couple of weeks ago when we were talking about it, I actually sold naked puts on this and started picking up shares. So
I can't talk you out.
Is it in this zone where it's naked put time to accumulate because you're anticipating some degree of reversal? Like, are we in that zone where the anticipation of the reversal is starting? Like, we're not there technically, guys. Like, we're just not.
I have no problem with an aggressive naked put at the support level, which would be in the 31 range.
As long as you're getting above 30, I would say I wouldn't want to do 30, just given the fact that 30 is kind of where that's your support zone. That's like the last line in the sand before it's 2027, right? And so, no, I wouldn't want to write 30 just because that is that last kind of like line in the sand. But anything above 30, 30 and a half, 31, yeah. Like, and again, I think we might be a little premature there, because look at gold. This technical pain isn't over, guys. I just starting to see a little bit of volatility shifts on the weekly chart here. And as you're coming into that 1700 handle, again, volatility shifts for me mean something, right? And you could say volatility shifts or momentum shifts. Both of them are fairly similar, but they do mean something to me, especially as you start coming into support. So for example, when you're looking at this type of price movement here, down, 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 look at the size of the candles as you're coming down. As you get into support here, that 1700 zone, that 1680 by 1700 zone, as you start getting into that support level, look at this, you violate the major support, falls like a hammer, finds the next level support, volatility shifts, right? So that's what you want to see here at the support level at 1700. You're not out of the woodworks, obviously, with that downward movement in price, underperforming the market literally here today. Maybe we retest that 1700 zone, but coming back to GDX here, GDX performing a little bit better than its counterpart in gold, especially from a relative performance just here today, finding some support at 32. Got a real good backdrop there at 30.69, 30.70. Yeah, I could sell. I could sign up for a naked put at 31, guys, on GDX.
Yeah, the only thing I would add to that, because I'm interested, is that if gold breaks its support level, that you have your trade management defensive action mapped out.
Oh, right? You have to 100%. Again,
and having that mapped out.
Okay,
so
the entire conversation started with, hey guys, are we ready to preemptively start selling naked puts because we think a reversal might happen? Like, there's a lot of hypothetical scenarios here. Yeah, I mean, we're obviously looking at it in the face of downward movement in price. We're not calling our shot yet, but I'm starting to get a little excited here. I could see a 31, maybe a small position there.
I agree.
Keep it on the radar.
I agree. And the whole intent here would be a fundamental, kind of intent that you want to own gold miners. It's not just a cash flow off the naked put. The idea here is acquisition of the shares. For me, at least, that's the way I'm approaching it. And
And I'm sorry, from a fundamental perspective, gold miners are cheap. When you go look at their fundamentals, they're
100%.
Any of your classic ratios, any of your classic fundamental metrics, they're cheap.
It just makes me feel like a real person, Tim, when you own something related to gold.
Physical assets.
Especially when you look at the Viacom craziness over the last week and a half, well, really over the last 3 months. Like, maybe I just want some boring.
Yeah, boring. You gotta have some things in your portfolio.
Even in this tremendous downward movement in price that has been happening in the gold market, Tim, even in that, it's went from 44 to 33. Like in a tremendous 6-month horrible bear market. Again, at least you don't have to deal with that nonsense.
Or the GameStops or the craziness.
Well, that I just brought up the latest
edition.
Right, the latest one.
I'm with you. I'm
willing to bet that if that hedge fund owns some gold in GDX, even though it's been going down, that'd still be in existence today.
Yeah, I would bet that as well. Somebody should have done a check on that, dude. Sounds like a lack of curbs and
maybe somebody should have said, or maybe should have just asked the question: is leveraging ourselves to 300% a good thing?
Yeah. I think the banks on Wall Street asked that question.
I think it might have been over 300%, Matt.
I was just making up a radical number.
Oh no, from the reports I'm reading, that's not radical enough. I'm hearing.
Are you serious?
I'm hearing it was in the 500%.
No. What are you doing, dude?
You gotta do something special to blow up an account in 1 week.
Five.
So. Oh yeah, you're 300%. No. That's for responsible traders.
Okay, and when we start having national conversations over financial regulations, before we just get into our Democrat and Republican hats, let's just remember these moments.
Yeah, but Janet Yellen, tell me more about how BlackRock's not too big to fail.
Oh, and Janet, tell us how Goldman loaning this hedge fund money is nothing burger.
Janet Yellen, you are a financial
Dude,
sector.
don't rip on
wait.
on your girlfriend.
Why would you take shots at Janet Yellen today? I didn't even see anything about her.
Dude, he's mad at Janet. He's just upset at Janet.
I don't know. She was in her
Dude.
testimony last week. Just
Come on, Tim. Janet didn't call him.
Didn't call
That's
you
all
back.
that happened.
All right.
Hey,
all
listen,
right.
I'm a bitter,
Mark's
jaded
been-
lover.
Mark's been Facebook stalking Janet.
Yeah.
Oh.
She blocked him.
She blocked him on Facebook.
That's funny.
She changed her relationship status to it's complicated.
Oh, what's not complicated is this Bitcoin chart. Let's quickly peek at that. Then I want to go into the sectors. Bitcoin just strengthening here, guys. It's had that overall impression for the entire of the last 12 months as we've been talking about it. The entire marketplace has been talking about it. A little bit of news here today. Visa is going to start accepting a thing called USD coin, Matt, which tracks the US dollar as a digital version of coin. Kind of story around crypto. I know, right? And then the other one is they're going to start accepting Ethereum on their networks as well. A couple of corporate adoptability type of storylines out of Visa, major credit card processing.
Wait a second. So Visa's accepting a digital version of the digital dollar?
Mm-hmm.
Is that what I heard?
Yep.
We've entered into the silly stage of Bitcoin analysis.
It's the matrix.
It's pretty silly.
Well, the sample analysis here is that we're pushing towards a breakout from a momentum perspective. If you can clear those levels, Matt, it's performed well on breakouts. Not everything does, but Bitcoin definitely is a breakout and run type of chart. Are you interested here in a breakout?
I think anybody that has a beating heart should be always interested in Bitcoin breakouts. Tell me the last time a Bitcoin breakout didn't work out.
It's been a while.
So I think that answers the question. Yes,
Yeah.
I am interested.
Definitely.
I'm more interested in a Bitcoin breakout technically and analyzing this technically than hearing the latest dumb headline of corporate adoptability. American Express now is taking digital dollars.
Here's going to be a story in your future.
MasterCard accepting, dollars. Can't wait for that one.
There's 2 or 3 different versions of this story. Blank Wall Street firm is now using Bitcoin for its clients. You'll get that one a lot. Blank fintech firm is now accepting crypto on their networks or using it in some form. You'll get that one a lot.
And again, most of that headline, though, is just the convertibility of Bitcoin back to the dollar, right? These corporate adoptability storylines are literally at this point just somebody trying to attach to the storyline. It's really
the next
silly.
corporate adoption headline I want to see is when my coffee shop, the drive-through, accepts in Bitcoin, then the cycle will be complete.
They've been accepting Bitcoin for years.
Like the coffee shop will literally say they accept Bitcoin, but you still hand them your American Express card.
That's right.
Like
That's
seriously, right. like that's how stupid this is getting.
Yeah. I mean, listen, I bought pizza with Bitcoin back in like 2013. Paid golf with Bitcoin. I mean, that's been there forever. So.
And I think like there have been so many pockets of market volatility over the last month. Bitcoin's withstood a lot of punches the last month.
Sure has.
Man, it definitely has. It's got a little Teflon there, but yeah, I mean, you give this a little bit more time to cook. Yeah, that breakout's lining up. I like this breakout now after a little bit of chop the last couple of weeks more than I did 2.5 weeks ago.
Yeah,
I mean, 2.5 weeks ago, you're talking about a continuation of a momentum trigger, and none of us like that. Now you're not talking about it being overextended. Who's talking about Bitcoin being overextended today?
Nobody. That's
Okay,
not
but
the read.
But what were they doing 2 weeks ago?
That it would run too far,
including us, right? I mean, because that's what happens when you get this type of run here. That breakout there does not. It's just the continuation of the movement. Now you're starting to see the analysis as this is This is called a continuation pattern, which is based on this trend, which would expect the new leg up. So yeah, the more time you get in that crock pot to cook, the better that breakout's going to line up. And so yeah, I do think you got to be a little bit excited about this potential breakout.
I agree. Let's move into sector analysis next and kind of run through some of these different areas of the market. We had some upgrades this week and some of, especially based on Friday's close and some of the strength. I thought I might have heard you try to pop in there. But let's start with materials here. Let's start with the strength that we have on the top end of the market here, Mark. Our top 3 rated sectors right now are materials, industrials, and financials. Let's discuss some of these areas first, Mark. What do we love the most about
let's talk about
materials?
the broad theme that baskets them all, right? I mean, we base our rankings at Tackle Trading when you go to as a pro, when you go to the newsletter every week, you'll see we've ranked every sector and we update those rankings. Let's talk. There's a broad theme between these sectors, and it is the rotation, cyclical, value, whatever you want to call it. It goes by a lot of names, but it has been the strong move into these areas of the market that benefit from a hot economy, that are in the value area of the market, but they're tied to the cyclical movement. You have a hot market, I mean, not hot market, a hot economy, reopening on the horizon, lots of money being poured in. And these have been very, very strong since the election. There's still legs to run, in our opinion. And then when you get technical areas and technical signals on the chart, because our broad evaluation is one thing, but we also always have to have, technical confirmation to give it a strong ranking. And in materials, and in financials, and in industrials, let's start with materials. So strong cyclical theme, breakout to all-time highs on Friday, strong candle. Getting a little hesitation after a big, because remember, this isn't a penny stock, this is a big ETF, all-encompassing, really strong 2 days, hesitant, but you're breaking to all-time highs in a hot theme area of the market. So there's a reason it's one of our highest rated sectors.
Well, and out of those three, by the way, the one that did catch an upgrade last week was the materials sector. Industrials and financials kind of maintained their strength up there at the top end of our rankings, and materials broke into a new high on Friday. I mean, literally the strong close, the strong finish to the week is what prompted that upgrade. And we've got a lot of components in this space that we really, really like. Outside of that, we actually have several other upgrades that we did in some of the defensive areas of the market. Let's go through the upgrades first, then we'll get to some of the downgrades, some of the other rankings. We upgraded staples, real estate and healthcare. Gave them all a 5-point upgrade just on strength. In fact, we wanted to upgrade staples more. There was a long conversation with the coaches about what was happening in the staples sector. And the simple reality is we felt it had run a little too far for a bigger upgrade this week. It's anticipation of the strength. It broke into new highs. It caught an upgrade into the 35-yard marker. But if you look at those daily candles, I mean, we've been up for a couple of weeks in a row. Maddie, in general, when we have that kind of run, we love it. We respect it. We did give it the upgrade, but we're hesitating until it kind of consolidates or can show us some other pattern. Real estate and healthcare. And again, I love that RSI, bringing that up here. Obviously, we're up at 85 right now.
When you have that type of massive run, not just on a day, but on a multi-week run, I mean, the last time it had a big run like this was in October, right? You came down to that 200, and you had a big couple week stretch, and then it flatlined. Staples isn't a momentum stock. And you said it perfect. Really strong run. Got to respect the price action. But these type of really fast runs, they don't always work out in the staples. And so you got to, upgrade, wait and see if we can get a little price stability. And then you could be looking at future upgrades.
Well, and I definitely think you will, Mark. I mean, the 5-point upgrade on staples with this type of movement was based on the fact that you were very overextended coming into the breakout. You do have a history of overextended runs that do not work out in staples. Staples is not an aggressive area of the market. It's one of the more conservative areas of the marketplace. And so there was a little bit of, I don't want to say hesitation from the coaches regarding the upgrade in staples. I think all of us were very, very excited about the potential breakout in staples. This is an area chock full of names that we like from a value perspective and from a fundamental perspective that don't get caught up in the euphoria sometimes that the rest of the market does. And so, it wasn't the hesitation on what is happening in staples. It was the backdrop of kind of what you said, Mark. The run up in October and November when you made this tremendous run, tried to break out, came right back down. You tried to do it back all the way back in September, ran all the way, came right back down. And so, we like the run coming into the 68 handle. Love that candle on the breakout. That is significant. We do think that is more significant than these potential breakouts over there, based on the volume, based on the price action, based on the theme that's playing out over the course of the last few weeks. You got to love the momentum in staples. And quite frankly, you are going to get more upgrades in staples. But when you have an RSI at 90 on staples on a breakout, it's not shocking to see it play a little defense for a little bit of time. Let these averages catch up. Like we were talking about on a longer time frame earlier, when you have this tremendous price go up and up and up and up, sometimes it takes a quarter for the fundamentals, for the earnings to catch up to the price. Sometimes it on a shorter time frame, when you get overextended, it takes a few days, it takes a week for these moving averages to catch up to it, for it to consolidate and see that next breakout. So I think what you're looking at in staples here this week, and I think you could say a very similar thing for the other defensive nature areas of the market, real estate and utilities specifically. I think you're all anticipating this breakout in utilities, anticipating price action in real estate, and anticipating the continuation of what's been happening in staples. I think all of those are perfectly fine. But what I would like to see, and I think what a lot of the coaches would like to see, is this price movement in staples last week, can it legitimize itself this week by holding 68? If you hold 68, snap back, there's going to be good trades there. If you hold 68, this legitimate this breakout here we had last Friday, it gets seen as far more legitimate to more market participants. And so, yes, staples should absolutely be on people's radar, but you're a little overextended. Excuse me, let me rephrase. You are very overextended in the short-term price action in staples. Typically, that's going to make us, we're fairly conservative in our rankings. That's going to ensure that we just give that token 5-point upgrade. And then if it does play defense this week, hold that 68, look for a bigger upgrade next week coming into a potential really good trading environment in staples a week from now.
Yeah, I 100%
Boy, that
agree.
RSI, I don't use the RSI on a constant basis, but that RSI on staples has been money the last 9 months on when to buy or when to take profits.
And again, RSI, it's a relative strength, which shows you have strength coming into staples. That is a positive thing. Okay. What it also states is you've had too much money come into it in the short term. Let it stabilize. Let that RSI come back down.
Yeah, I agree.
And by the way, RSI can come down without the price coming down.
Yeah.
And that's the powerful thing about RSI. Price doesn't have to contract here. It doesn't have to contract here. You could see a stabilization above 68 and see RSI just stabilize into this range. And that would be powerful. So it's an indicator that can really, really help you in assessing overvalued, undervalued situations, buy and sell. It's one of my favorite indicators for a broad range of analysis.
A couple of the other sectors that we broke down last week. Look at technology real quick. Flash through a couple of the easy ones. Then we're going to spend some time on communications and energy. Tech, we maintained, 45-yard marker. It's just kind of hanging out in this range until we get clarity on the chart. We're going to be cautious until we do get those technical signals to confirm. We move discretionary down into the same ranking as tech because, quite frankly, a lot of very similar price action. They've had correlation to each other for some time. If you look at those two charts, a little bit of the same pivot point type of analysis, volatility type of analysis. We felt like it was fair to kind of keep them on that same 45-yard marker together until we get clarity out of those two. But the longer conversation was around communications, and we had to downgrade this one, obviously. Still very much excited about certain names in communications. We like it. But when you see the volatility in some of the pockets that are in a sector ETF that only has like 30, 40 holdings, you have to at least respect that volatility. We did downgrade communications on that. And Mark, just explain the thinking behind that. When Viacom and Disca, even though they're not the only stocks in that sector, did what they did, we kind of healthily looked at it. We had this long conversation. We did downgrade to the 30. Why do we do that kind of thing, Marky?
I mean, it's just... It goes back to like what Matt and I were talking at the very beginning of the show from a top-down perspective, is that you can't trade everything, right? And so when you have things that on a chart break a pattern, break a trend, break a something, they get messy, for lack of a scientific technical term. When they get messy, and when there is a lingering story, hanging over an area. You don't overreact, right? It's like, oh my gosh, a fund got blown up. We're going to make it minus 40 now. No, you don't do stuff like that. But you have to respect the totality of things. And so you can still be bullish on something.
And we still are, by the way, to clarify.
And you still are.
We still are
you can
bullish.
still be bullish, but when you look at the totality of, listen, you had an old breakout level give out. Old resistance didn't act as new support. You know, and you have this lingering story. And so you have all of this mess, right? And you're like, all right, you know, I'm not gonna, you know, overreact, but I got to respect the mess. You know, it's like why we downgraded oil a couple weeks ago. You know, it's messy now. It's not that you're not on energy stocks. It's not that you're not bullish. It's just got to respect the chop. Got to respect the mess, even if you yourself are really bullish. And so communications, obviously a very strong trend since the election. Really done very nicely. Just got a little messy. And so that downgrade you know, on our scouting report reflects that mess.
We still have a bullish rating. We're still anticipating many stocks in this you know, sector to potentially set up, but we had to respect it. We did drop it to the 30-yard marker, just on the right side of that bullishness. And then the last one here.
Hold on, real quick on comms. Yeah, you got to respect the storyline. There's no doubt about that, and that's where the downgrade does come into play here. However, you are still setting technically at a higher level of support. You currently have support being formed right on that 50-day moving average that coincides with $72. That is slightly higher, and again, slightly higher, but that is slightly higher than the 71 support level that you were forming here just in the recent run up before the breakout. So you are technically still in that bullish uptrend, and thus the ranking does signify that bullish uptrend. When you're looking at the communications sector and you're looking at this from a top-down perspective, the volatility of this sector is really being established in two different areas of this sector. The first one is, and by far the most important one, is in the entertainment space of this sector. And you're talking really about Charter Communications, Comcast, Disney, Disca, Dish Networks, you know, Netflix is there, Viacom. But even when you look at that area of the marketplace, okay, that area of the marketplace, we're looking at comms here. Take a look at Disney. Disney didn't really get caught up in the volatility of that specific storyline that is around Disca and Viacom relative to that hedge fund, right? So you're seeing an area of the market that is performing very similar to, or you're seeing a stock performing very similar to its sector. Doesn't really get caught up in that specific industry storyline. Disney performing like its sector, not like the storyline. CHTR, Charter Communications, doesn't get caught up in the storyline. When you look at even Comcast, CMCSA, even Comcast doesn't get caught up in the storyline other than just one day. And so this storyline, even though it's being reported tremendously and everybody's talking about what's happening with that hedge fund getting blown up as tied to Viacom and Disca, it's not having a massive market impact even in its specific sector. Once again, when you look at Comcast, I'm willing to bet more people are looking at Comcast as a buy the dip candidate than, oh my goodness, let's sell and get out of the way here. When you're looking at Dish Networks here, don't you just have this as a bullish retracement?
Yeah, clean one too.
I mean, isn't that the only thing you're seeing here is a bullish retracement? Okay. And then let's take a look specifically at those two stocks that are getting caught up in the storyline, and that is Viacom and Disca. Viacom, obviously the volatility is here. It could continue. We don't know when that's going to stop. But Mark, could you see a scenario where that stops around the 200-day moving average, right where the price action starts happening before you see the euphoria? When it comes down into its normal price ranges, couldn't you see a storyline this week where, and again, this candle is just Monday, the same way this candle was just Monday right here, right? You saw the rest of the week, but can't you see a storyline here, Mark, where Viacom and Disca start to find support
No,
on its 200-day moving average?
It's very, very common on these mass moving averages. I mean, pull up Amazon for a second.
Well, let's stay in communications very quickly though. So again, when you're looking at this one day coming into the same price action, same 200-day moving average bounce here. So again, you're in the storyline, but I could see that storyline dissipating here this week. I could see slowing momentum here this week in Disca and in Viacom. No doubt about that. We'll see if it actually transpires that way. But if you do see that start to stabilize, I haven't seen an area of the market that got caught up here. Guys, this same storyline with GameStop, it was the same storyline. Massive appreciation, hedge fund gets blown up, everybody talks about it, the entire market's freaking out, and yet this storyline didn't even impact its industry that much. It's really tied to just a few stocks. And so like it just, for me, in looking at the communication space, I don't think I'm as concerned as others are about comms. I still think comms is in front of technology, in front of discretionary, and I still see it only being tied up to Viacom, Disca, and a few other names right now. I don't see it up into the broad, in its broad industry, and that industry is entertainment. When you look at advertising in communications, okay, take a look at IPG. Don't you have this as a bullish retracement with a possible trigger?
Yeah, right around that 29 mark.
Okay, so that's in advertising. When you look at the broadcasting, Fox. Now Fox certainly it got caught up into it. Certainly got caught up into the Disca and the Viacom and the hedge fund news that came out over the weekend. No doubt about that. But here's Fox, and I know it's crazy, but I still have this as a bullish retracement.
Yeah, deeper one, obviously.
I know it's crazy. I'm not sure it's deep. I'm not. It just seems deep. I'm not sure it's deep. I don't. I think it's a 50% Fibonacci retracement, Tim.
Well, so it also lines up with the old breakout level, old break resistance, new support. Yeah, I mean,
I could see slowing momentum at 36.
Yeah.
And so again, I think this storyline is being reported hot and heavy, and it should. We need to treat it with the respect it deserves. But again, it's only in those relatively few names right now. And even in some of the names that it gets caught up in, like Fox, I still kind of like Fox here. And call me crazy, but I kind of like Viacom at 40.
I kind of like Activision potentially breaking out at 95, by the way.
Well, I didn't even talk about that. You know, that Head and Shoulders is about to get blown apart by Activision. Yeah, that Head and Shoulders is about ready to get destroyed by Activision. And look at that weekly chart.
That weekly chart.
Look at that weekly chart. That is just sexy. That's just sexy. Viacom's not so sexy. That's sexy.
No, Viacom's not so sexy, but I love the analysis. I mean, taking us through the individual components, I think gives you a lot of context, you know, for sure.
Well, and again, the point is, it's not, as of right now, it is not a storyline that we're seeing play out similar to GameStop. And I think a little bit of this is simply because we're a little bit more used to the meme nonsense today than we were, say, even 3 months ago when GameStop was going on.
And then the last sector that I did want to talk about was XLE. I know that you referenced it a little bit earlier in the show, but I got a simple question for you guys. Obviously, we are interested in this retracement. Weekly charts looking good, hitting that 90 EMA and whatnot. Some of the major names like Chevron and Exxon, they were actually strengthening at the end of last week. They're all hesitating a little bit here today. But guys, I mean, out of all of the spaces, there's so much out there. You know, there's strength in materials, industrials, there's deeper pullbacks in some of those, some other areas. But XLE, man, I gotta tell you, I'm excited about this potential. Mark, what are you seeing in the sector, and how are you going to approach it?
Well, I mean, I already have exposure, both long-term position, short-term cash flow trades. So I already have plenty of exposure. I'm approaching it from an add on big dips, and then so I have my existing exposure, and then when they have a big dip like you do, I add exposure, and then if you get a run up, I take profits on that I added on the dip while keeping my other longer term positions running. So that's how I'm playing energy. And listen, if you have like a 9-month energy run, you're going to see dips. You've already seen 3 dips, in the last 3 months, dip, dip, dip. I mean, and each of those dips, if you analyze them, I spent some time analyzing them this weekend. They lasted about 10, 11 days. Then you resume the cycle, 10, 11 days. So, it goes along with the personality, but I don't think this run's done. But I'm going to just, buy some dip, take the profits on those while keeping my longer term positions running. I just believe at the center of my thesis on energy is that energy is a reopening play. And that when the economy does, and we get that surge of euphoria with the reopening, energy comes along with the ride.
I agree.
Yeah, I think everybody's looking at energy from a dip perspective here, but I don't think everybody's looking at energy from the same time frame perspective. I don't see a lot of swing trades here in energy where you could expect 3 to 5 days of quick good appreciation, right? I think you're going to have some chop, but I do agree with Mark's longer term view here that this dip is going to be seen as more of a position style where people understand that it's not just going to be, well, maybe, but most likely it's not just going to be 3 to 5 days straight up and then break out and run here. I don't want to put words into your mouth, Mark, but I don't think that's what you're anticipating here either. You keep saying 9 months, 9 months, 9 months, because I think you've had a philosophy for 2021 and having that energy play out in 2021. And I think Mark's looking at this from more seasonality, more position style, longer term, understanding that there's going to be some chop here, understanding that it might hesitate for 3-4 days underneath the 20, and it might hesitate there. I see this more a little longer term, Mark. I do.
Listen, I think swing trades on energy, I mean, there's going to be pockets, right? There's going to be pockets, but I mean, I'm not going to try to find those pockets myself.
No, again, there's 24 stocks in the S&P energy space. Of the 24, I think 1, maybe 2 are setting up from a potential swing trade, but it doesn't have sector backing to it. Whereas most of the sectors kind of looking a little bit like the energy space itself right now. And so I just see this as a little bit of a more deeper, prolonged. I don't think you're going to have that quick a price appreciation. I don't expect a trend to continue like this. I expect it to be more like this. And so I think you're going to see a little bit more of this than you do this. And because of that, I think it's more of a position style.
Yeah. Well, and that's the personality behavior of these types of companies, by the way. Exxon, Chevron.
Tim, can I teach Elliott wave theory?
Nope, not right now.
It's going into a wave 5 that would be fairly consistent to wave 1. I'm just saying.
All right. Last couple of company news items. Then we're going to
go. Pretty consistent.
I wish we had more time because I would want to hear that.
All right. He's trying to trigger me.
No, it's a 15-minute deep dive, Chucky.
Yeah, no, that's why I said I wish we had more time, because it's not a quick thing. If I thought it was 2 minutes, I'd do it just so I could get something to eat. But but I know it's a longer thing.
Oh no. Tim knows I have it. 100%. And he doesn't want to see it.
Not right now.
He doesn't want to see it. He doesn't want to be like, Matt has one. He found one that is perfect, and he doesn't want to say it. All Tim's going to say is, yeah, but that has nothing to do with anything else.
It's like we've had this argument before.
Yeah, I just draw a little bit. Okay, I'm good.
Elliott wave theory. All right.
Some people don't like consistent in technicals and momentum.
I don't have.
You
I don't
don't
have an
like
argument
projection
against it right now.
analysis?
No, not doing it. We're moving on.
No? Okay.
All right. Let's
Okay.
bring up a couple of companies in the news, and then we're going to get into trash that makes cash. Southwest Airlines, LUV, and we'll kind of go through a couple of these pretty quickly. They are buying Boeing 737 MAX planes, the one who obviously killed
A
several
second.
hundred
Hold on.
people.
We go from me wanting to do a deep dive on Elliott Wave and Fibonacci to talking about Boeing and Southwest. Oh,
Boeing and
Lord.
Southwest.
Enjoy
Yes.
this one.
I don't really find much in the news actually impacting the stock. We know this is going to happen over time. Boeing's going to sell more of their planes. As you know, airlines are going to get back out there. Southwest wants to replace some of their fleet, put a contract in place to 2029 actually to do business with Boeing. So, you know, Boeing has deeper retracement. I have no interest in that company. There's other ways and better ways for me to play reopening, in my opinion. Space, SPCE, if we can here next. ARC Innovation, Mark, is going to be launching their 8th ETF tomorrow, and is dominated around companies in the space exploration area of the market. Kathy Wood, obviously famous from the performance she's had in the ARC Innovation Fund. She talked about this one a lot. You know, she's actually been a proponent for SPCE specifically, but there's a lot of other companies around this area that she's interested in as well, and they're launching the ETF tomorrow. Marky, just another kind
What's
of story.
the ETF?
Oh, this was the exact quote. Any company that is leading, enabling, or benefiting from technologically enabled products and or services that occur beyond the surface of the earth. We don't have the composition yet. So yes, I know. I had to read it specifically for a reason. So it doesn't necessarily have to be rocket ship companies, Matt. Anybody.
Wait a second. Hold on. Somehow, a miner's going to be in that. Somehow somebody's going to make it. Well, you know, there is that one asteroid and that we might be able to mine some gold out there. So let's go ahead and put new mining on in that list. Okay, that is about. So basically any company that you could subjectively argue that has anything to do with anything can be in that.
Maybe a communication company because they take
Okay.
advantage of the satellite.
Well, you got to have satellites, bro.
Yeah, that's right. That's right.
You know, it's getting pretty silly, Wall Street, that you're creating all these amazing funds, but then when you create what goes in the fund, you create it subjective enough that you can literally put any company in the S&P in the fund.
Yep.
Okay.
Make up their own definitions. That way they can build it however they want to. And it looks like that's what Kathy's going to do.
I can't wait till Caterpillar is the highest rated space company.
Stop it. Oh, goodness. And then we did have a couple of upgrades and downgrades. Nothing too crazy, but Twitter, TWTR, you know, obviously the popular social media.
Well, you got to use social media company in space.
Is that a space company too? Because they
bounced
the transmissions.
You don't think those astronauts use Twitter?
I'm taking Matt's not going to invest in Kathy's new ETF. Is that what I'm reading? You know?
She got 8 identical funds.
They're all innovation funds, bro.
And none of them did well last week.
Listen, I want to be clear on something. Disruptive innovation is just innovation. That is what innovation is. It is disruptive. It has been disruptive for thousands of years. That is what evolution is.
Part of the definition of innovation is that it should disrupt technologies. That's exactly right. You know, I were talking about that semantics last week. Yes, it's just innovation. Twitter, though, here, guys, do you agree with the upgrade, you know, to a buy, straight buy from a hold? They had a wonderful quarter, Matt, that took off like crazy. I remember us covering the earnings report. It's got a beautiful long-term, you know, chart development. Obviously, the short-term chop is there, but do you guys agree? Buy on Twitter.
I don't know. Like the technicals, you could make a case in a lot of different ways. I just am not a huge fan of the company. I really never have been. I mean, I've taken a few stabs in the 20s at it, but once something goes like this, I don't know. I don't know if you're getting a good deal. I don't know if it's a poor deal. I don't know.
When Mark says he took a few stabs, what he really means is I thought about selling a naked put on Twitter, but then I realized it was Twitter and I felt gross about it.
I did feel gross about it. I actually did sell a couple naked puts over time on Twitter, but you know, for me, Twitter's a trading stock. I don't have an interest in from an investing standpoint.
I always will respect somebody who will do an upgrade in the face of volatility.
Yes.
It makes me think they're seeing something. It makes me think they're really analyzing that they're looking into multiple time frames, that they're actually taking the time and the care to do the analysis and the hard work to have a take on something based on something, versus whenever you see just the chasing of the dragon of upgrades and downgrades where every bank just tries to chase the other bank. Those things drive me crazy.
You saw that with Viacom, right? Analysts
Yeah.
upgrade on the way up, and then last
without
week
even
down,
thought.
down, you know, it's
without
just,
even a thought. And it's
chasing
just
price.
silly. It's just silly. But yeah, I think you got to look at Twitter here, a little bit of a deeper pullback. On the weekly chart, trying to find support at $60. You can definitely see this as a little bit of a buy the dip candidate on that weekly chart, forming support. The daily chart, though, is just so garbage. It's a very difficult chart to get an accurate read on. The only thing you can say is that weekly chart is starting to stabilize. So I could certainly understand the beginnings of that analysis on that weekly chart. Seeing, $60 hold this week is going to be important there. So I can't disagree with the upgrade because the analysis on that weekly chart could find a bottom, but it's a little too choppy for me.
Mm-hmm. Yeah, I think it's too choppy.
Don't get me wrong. I love short-term downtrends and an overall longer-term uptrend. Those things on weekly charts are so good. But again, not every short-term downtrend is identical, and this one's pretty choppy right now. So I don't disagree with the the upgrade, but it's a little choppy for my liking.
Mm-hmm. I just am thinking about the earnings that you detailed when they reported in February, and they did crush those numbers. And, they're moving towards monetizing more from their daily active users, things like that. I think there's stories behind Twitter this year that are going to benefit the stock. So a longer term buy rating, I got no problem with it. Shorter term, I'm with you guys 100%. I don't see anything there that's actionable right now.
Well, it's not just this, Tim. It's not just this. It's this too. There was no consistency here.
Mm-hmm.
There was no, look at that great setup, great trade. I mean, Twitter has not been a tradable instrument that you could get a good projection on literally since the election. It's been difficult. Even with the upward movement of price, it's been difficult.
Mm-hmm. Mm-hmm. And then a lot of the other firms today from upgrade, downgrade land, they just reiterated their favorite picks, like Home Depot, Lowe's. They got reiterated as a top pick. Netflix reiterated as a top pick at Guggenheim. People who loved Facebook up the price target over at Deutsche Bank. So
how many industrial stocks are going to get upgraded in the face of Biden's infrastructure plan that comes out in detail this week?
Man, Wednesday they're rumoring it, right? Yeah.
All of them. All of them. Okay. Details are going to matter on this infrastructure plan.
Yeah, really.
I will be looking into the details of that infrastructure plan like a hawk. But details matter. It's going to be interesting to see how liberal we interpret infrastructure in this plan.
Yeah, I was going to bring it up, but how much money is allocated towards clean energy projects?
It's going to be $1 trillion, Mark.
Because clean energy has gotten beat up lately with this whole thing. So that's an area that I've been looking at, but you don't know the details of the plan.
Guys,
if it is a massive number, man, a lot of those clean energy stocks have been beaten up lately.
And let me be very clear on the term infrastructure. The term infrastructure used politically is the same way of financial companies categorize companies in their funds. Infrastructure can mean anything. Kathy Wood's fund creation can literally mean anything right now. Same thing in infrastructure.
Yeah, instead of infrastructure,
that's why the details matter here, because infrastructure can be digital, physical. Infrastructure could be security based. Infrastructure could be minimum wage acts. Infrastructure could be a laundry list of wish items. We don't know. What we do know is the plan calls for about $3 trillion. And so that's where we're at. We should see some details, but since we're talking upgrades and downgrades, I'm willing to bet you're going to get some upgrades and downgrades this week coming out of the infrastructure plan.
Yeah, I think you're going to see that quite a bit. And those details on Wednesday, I can't wait to dig into them with you, Matt. I think it's going to be
and guys,
very, very important.
believe me, every single one of us are going to have things we disagree with in the infrastructure plan. Every single one of us. But for the love of all things holy, can we at least one time agree that we need infrastructure? And let's just have a conversation on that without going into the political nonsense.
Mm-hmm.
We need infrastructure.
Yeah.
We need it.
Yeah.
We need security. We need cybersecurity. We need these things.
Yeah, no, I'm just looking at it as a big, gigantic spending bill. The details are going to be fascinating.
Details matter here.
Yeah, I agree.
Details matter.
I agree. And that is rumored to come out on Wednesday. I think President
Well,
Biden will be detailing some
and
of
quite
that.
frankly, the details on the $1.9 trillion stimulus package didn't matter. We rarely talked about them in the halftime report because they did not matter to the marketplace. The only thing that mattered was the total number that came out, whether we were going to approach 1.9 trillion or 1.1 trillion. That's literally the only thing that mattered to the marketplace. Nobody really cared about where that money was going. Infrastructure, everybody cares where that money's going because it has an impact to specific industries.
Mm-hmm.
That's why those details matter. Also, the details matter because you will find out very quickly which ones will get passed and which ones won't.
Mm-hmm.
So
the big number I keep hearing.
I don't think Tim wants to talk about
plus.
infrastructure.
No, I'm thinking about it. I mean, the big number I keep hearing is 3 trillion plus, and I know Biden's going to go through it. I personally, I know, and we all do have our opinions. Roads and bridges and airports for me. I know that.
Well, the key difference is Biden can't get 3 trillion in a budget reconciliation process.
He's going to have to work.
He has to work with Republicans.
Yep.
And it's about stinking time.
I agree with that 1,000%.
And I'm not criticizing, I'm talking politically. It's about time we work together.
I agree. All right, last segment here, guys, that we do every Monday is trash that makes cash. I can't delay it anymore. Marky, the people, they seem to like it, I think. I'm not certain about that. People who love it probably love it, and others are like, that's trash. I feel like that sometimes, I'll be honest. But a lot of these picks that you've been going through, Mark, have actually been very fruitful in the last couple of months. So what do you got for us today?
Oh, no, collectively. And first of all, I'd like to give a shout out to the new Trash for Trash expert, Matt Justice, who gave me a good trash pick that I made money on this week. Rel.
Thank you.
In fact, it wouldn't even qualify right now. It wouldn't even qualify right now because it's above $5.
I'm the trash king.
Listen, I'm not afraid.
We have the architect. We have the queen.
Now, if you were
and we
more
got the
open-minded,
king of
Tim.
trash. That's me. I'm the king.
Yeah,
of
so
trash.
I got to step up my game, or Matt's going to steal my trash. Title.
See that's what I do, Mark. When I touch something, it's no longer trash.
Listen, the first company I have for you today, because I'm interested, because we've had a real volatility on the underbelly, and a lot of the these cheaper stocks. They get swept up in that volatility big. And so I really was looking this week at companies that have done well in this recent volatility, held the own. Because once again, the broad markets do not let you know the volatility in the underbelly, the meme stocks, the theme stocks at all. So I look at companies that have held up a little well. Now, Matt and Tim, the first company I have for you at one point had a market capitalization of $41 billion.
Oh, that makes me care not at all.
They once owned the naming rights to the home stadium for the New England Patriots.
That makes me hate them even more.
You're
not doing a great job selling me on this pick, bro.
Oh, I just thought these were fun facts of the company. They don't matter at all in the analysis.
I usually see naming rights on stadiums as a really dumb way to spend your investors' money.
It's questionable decision, and this is a former .com bubble bust. Still Connect, STCN, and if you go to a weekly chart for me. Now, one of the things I like is, once again, this stability, because in following the underbelly, oh my gosh, so many stocks that are cheap stocks have just got rocked over the last month. So many different areas. I mean, and I'm not just talking about stocks under $5, just, your SPACs and your theme stocks. And so I wanted to look at, in the recent weeks when so much of this volatility has been going on, when even small caps have been struggling, who's been holding their own? Who has been showing a little strength, and who might be on the verge of a technical signal? Still Connect came off. Now, I will be the first to admit, I don't know a lot about this company. So many of the times I bring a pick here is because I love the stories, like Chico Voss. I love those stories. And so I don't know this company as well, but so I did this in analyzing when I was scanning last night. It's like looking for stability and pattern, looking for potential technical breakouts, and Still Connect came up. Now, if you go back to the daily chart, so the weekly chart has some smoothness to it. And from the daily chart perspective, we got some potential levels of breakout. Now, you're clearing one of those levels today, right? Little short-term resistance from the last little week. But there's obviously a mile to go on the chart. There's a mile to go on the chart. From a technical standpoint, because that's the only selling case I have. Do you guys have any interest?
To clarify, this is a shipping company, right? Not a steel company?
They don't do shipping. They do supply chain management services.
Okay. I see. Like logistics and freight and all that kind of stuff.
And once again, I don't know a lot about the company itself. It came up on a scan. I did a little research and it's like, oh my gosh, they used to have the New England. And I was like, I remember them because I remember when the company lost the naming rights to the Patriots Stadium because they went bust. And then I was like, so little nostalgia memory from my football past.
Right. I mean, I see the pivot points changing here, obviously, with the momentum rolling back into that. Obviously, the gap from early January catches everybody's attention. That's where the volume is. It bursted out from $1.40. Looks like it popped up all the way to $2.90 there just in that one day. It's taken a couple months to compress that. I'm looking at the history of this company, and it's starting to pick up since November. So there's something here above $2, but then you've got the left of the chart 220 and the 290. I don't know if we could map this out. I have tepid interest here, to be blunt.
Well, I mean, when you look at it, you also look at it like pretend this was a $200 stock and it was at 205. 220, that would give you a lot of room. 290, I mean, you wouldn't let those things stand in your way if you thought there was a chance of upward or short-term price movement. So,
Matt, do you have any interest?
What's less than tepid? 0. That's where I'm at.
What's less than tepid? 0. All right, Marky.
I don't think tepid is less than 0, but that was funny.
Mine is less than 0. 0 is less than tepid.
All right. Next one is brought up.
Patriots. No. Tom Brady went to Florida. Done.
Don't know how that's connected.
It's as connected as anything else we're talking about on this company.
All righty, Marky. For us, that's
you didn't get me on Still Connect. No.
All right. The next one is
can I tell you why though? Really?
Yeah.
Yes.
The daily chart is a garbage mess of dumpster truck fire. Like, it's just, you cannot get a read here. It's very, very difficult to get an accurate read here. Stop loss management would have to go under 1.5 in my opinion to get outside of any of that chop. Your trigger above 2 might work out, but your target's 2.2. I don't think the return justifies the risk.
Fair enough.
I just said the New England Patriots. Tom Brady went south because I didn't yeah.
What else
How
you
do you feel
got?
how do you feel about the Dolphins trades?
You know what, Mark? I want to be very clear on something. When you're looking at a company, you invest in not just the brand, you invest in the individuals that run the company. And if I were to break down the NFL management techniques in company management, I would put the Dolphins in the top 3 right now. And I think if you're an NFL fan and you're looking for a team to bet on the next 20 years, get the Dolphins. It has nothing to do with the players on their team. It has everything to do with their management.
Do they have disruptive innovation?
They have disruptive innovation elevation.
Oh, listen, I love what
they
they're doing.
elevate the disruptive nature of innovation, Tim.
That's right. If you're an NFL fan, the Dolphins made some pretty good moves last week, shuffling
Pretty
up some
good.
draft picks.
No, winning people at life make those moves.
And if you know Coach Matt here at all, he's a huge Dolphins fan, the entirety of his
Listen,
life. So
and anybody that knows me, I'm a very, like, I just always hate on my own team. I'm excited, guys. You
Yeah.
wait till the Dolphins start winning. You're gonna have to deal with that level of Matt. No, it's not good for you too.
coach, management, young players, good draft picks, they're
It's the
moving in the right
management, it's the
direction.
vision,
Mm-hmm.
decision-making process. Yeah, I have a lot more to say on that trade than I do this company.
Mm-hmm. They should have kept Ryan Fitzpatrick as a backup.
You're ridiculous.
All right.
I love
my
the
second
Baidu.
and last one is one I brought a couple weeks ago. It's been one of my favorite cash flow plays for the last year. It's been right in the 9 for about 3 weeks now. Genius Brands, GNUS. So I brought this up a couple. Go ahead.
Oh, I was just saying, Mark, this is one I wrote down technically.
Mm-hmm.
This, and once again, this has been a stock that I've loved to cash flow, huge premiums, back and forth, volatility has been high, been really nice. I mean, there have been time stretches like on the GameStop fiasco that happened in January. I was getting like $80 for $2 naked puts on. I mean, there are time pockets where the cash flow is just, but it has been setting up and there has been some movement. And so once again, it fits that theme of, small cap stocks have not done well. Penny stocks have not done well over the last month. SPACs haven't done well. Genius Brands, and it's Stan Lee and Arnold Schwarzenegger. And if you don't know who Genius Brands is, they do children's programming. And so cartoons, children's content. And have been acquiring a lot of IP in the last year. It's a company that nobody knew about a year ago, kind of got into cult consciousness during the pandemic because of the big spike it had. It was one of the first stocks to do something absolutely insane and crazy where people were like, that's ridiculous. And so it kind of became a cult stock amongst traders. But you're seeing some upward pressure and you're seeing a clear breakout level potentially at 3. And so if you go to that weekly chart, and that spike where it went to 1173, that's what I was talking, where it got into the cult consciousness. But you see
that
a
was
little.
The peak euphoria post-pandemic.
That's when Hertz was going up, right? And so
I remember the storyline.
Genius Brands and Hertz, they were kind of this, what's the market's insane. Well, we've seen a lot of insane stories since then, right? But you're seeing, I mean, this is a company that the believers in this company, and I don't know if I'm a hardcore believer or if I just like the cash flow and it's a stock that's treated me very well for a year. But the story that they make is a very compelling one about acquiring content, acquiring intellectual property, acquiring brands. The Stan Lee recently, one of the big gets. And so they're actually acquiring, content, IP to put into, programming network. So there is a story here. There's also a technical level with a lot of clear air to the upside. So I wanted to see you guys' take on the technicals on it.
Well, technically, I don't like anything under 3 here, Chuck. Yeah, I do like the breakout formation above 3, though. For a couple reasons. Number one, you get the hesitation above right at 3. That's where it kissed off in earlier January before it got plummeted right back down to some degree of reality. Came back up, fought against that 3 again, got beat up a little bit last week. Didn't get caught up in any type of bloodbath, though, really kind of riding that 9. I think that riding the 9 really solidifies your opinion on that potential breakout. So that's first and foremost. I don't like the dip. I think the dip's choppy and would be difficult from a stop loss management perspective, but I do like the potential of that breakout. You look at that on that weekly chart, you see that breakout of $3 line up with the potential target into the 325 range. That'd be target 1. If you get above 320.25, you got nothing until you get into the 4. And so, yeah, I definitely see a potential breakout here on Genius Brands. And you said, Mark, you don't know what you like about this company. I do know what you like about this company. You like the name. That's what you like. You like the name Genius Brands. That's it.
It's a good name.
Yeah, you like the name. I get it.
I also like Stan Lee.
I do like Stan Lee too. I think that the dip's a little choppy here. It's not that way on the daily chart, but if I scale in, you kind of see that little chop on the wicks here, little chop on the wicks there. I think that's really choppy here, but You keep riding that 9, that breaks out of 3. I think you got some pretty good price appreciation above 3.
You know what they say, when Genius Brands goes to 3, it goes to 4 every time. You know.
Well, other than the 14 times it did stop at 320. Other than that,
hey,
but yeah,
it would have been fun to do trash that makes cash in the pandemic. Hey, Matt and Tim, I got a stock. Currently, it's at 5 cents.
I know
You know?
it would have been a different beast. Oh,
I got this Bitcoin mining stock. It's now at 47 cents. It's called Riot.
yeah.
Any
what do you
interest
think of
in
Riot?
Riot at 47 cents?
I'm willing to bet I would have wanted what I said actually to be recorded. I would have said some horrible things about Riot. So actually, I think I do have some horrible things I've said about Riot in recordings. But no, Mark, Genius Brands, I think the breakout is what does interest me a little bit.
Yeah, I mean, there's two things, and right now, because I don't like it at this current level, even for a naked put. If you're going to do some cost average down plan like we're doing,
me either.
I either like it to break out, or I like a much deeper pullback. For me, it's a little bit of a no man's land right now, but no man's land is, a setup before something happens, right?
Oh man, see the difference between Mark and me. Mark would see a sell off to 1.6. And
I'd sell those 150 naked puts like that.
That is the greatest thing in the history of mankind. And I'd be like, that's garbage, purely garbage. But the breakout, I love that from a momentum. It's just to each his own, right? Mm-hmm. But the breakout, I do like the breakout here.
And plus, we always develop, and this is for any trader, stocks that treat us well, we develop a sentimental attachment to, right? So,
what is it with healthcare and trash? There are 188 stocks, over 750,000 shares traded daily that has, by far, the most trash is in healthcare.
Is that right?
It's biotech and pharma companies.
Hold on. I'm telling you, I'm looking at, I didn't do any scanning for trash. I wanted to find you guys a quality pick. I'm looking at industrials, 28 stocks, basic materials, 31 stocks, communication services, 33 stocks, healthcare, every stock. Man, trash. Who knew healthcare was where all the trash was?
All of it.
Dude, it's probably a lot of those biotech firms.
It's a lot of those biotech firms.
Those little dinky biotech
Tons
firms.
of those biotech firms.
By the way, Mark, you made my job easy here. Genius was my pick as well.
Are you serious?
Yeah.
There you go.
I like the breakout above 3. I think the momentum here is potentially tradable.
Now, what if it pulls back to 150? Can I get you to...
Not interested.
There's not a chance.
I'm not interested. If it fails trend and pivot, see, I'm interested in playing a momentum breakout. You want to own shares or sell naked puts against it at lower levels.
The only thing Mark wants more in life than this going to 5 cents is 4 cents. That's it.
Listen, this was like about a blah market, because the market's been blah the last 6 weeks, right? I like a blah market. Because you get some things to sell off. Genius Brands has been one of them. I've been kind of upset.
All right, I got a couple trash picks.
Okay, I made money on yours last week.
Let's see if I can. Let's see if I can make you some money, Chucky. Okay. All right. Okay, and I spent a lot of time finding these 2 picks.
All right.
A lot of time.
The last 4 minutes, right?
How long has trash that makes cash been going on?
About 6-7 minutes.
About 2 minutes. All right. Let's start with the banks. Now, what do you guys think of the banks? Let's start top. What do you think of the banks?
I
like financials moving forward.
Yep. We like financials, right?
Mm-hmm.
Yes.
What bank do you guys like? What banks? Just give me a couple banks you like.
Oh, we love Bank of America for cash flow. We love Goldman
Sachs
on
America
the street.
Cash flow, right?
Yeah.
Got to like this trend, potential breakout there, 39, good cash flow play. I agree with that. Stable company. What, Mark? Give me a bank you like. Mark likes Goldman. He's a fan of the devil.
I love Goldman.
Yep, fan of the devil. Nice little, bullish retracement coming into 320. I don't see this as pivot confirmation, so I do see that as a retracement, a little deeper retracement, but I could see it. Okay, all right. Tim, where's all the old money banks? I want to see it. Okay, what city? Halftime crew. This is question for you.
Matt's gonna talk about it.
What city has all the old money in? What city has where's the mecca of Forex trading? In what city?
The
What city? What do you guys think?
oldest money in the world.
Well, I was thinking Zurich, Switzerland.
Well, I was thinking London.
Mm-mm.
I was thinking London myself.
It is London.
Yeah.
It is London.
Did-
London.
Fun
Lloyd's.
fact.
London.
Did
Fun
you know
fact.
there are more billionaires per capita in London than any city in the world?
London's financial mecca.
You got Lloyd's for us, don't you?
Lloyd's. I do have Lloyd's banking.
I know my under
group.
5 stocks.
I was giving you a couple hints. But I got Lloyd's banking group here under $5.
How do you not play that breakout?
Here's
It's
what I
clean.
like. Here's what I like about the breakout. It is, like Mark said, very, very clean. It's a lot cleaner than most of those big name charts you'll look at, the Goldman Sachs, the Bank of America's, the Morgan Stanleys of the world. You want to go look at your insurance companies? You can find some chop there. What you're not going to find is a better potential trigger in the entire financial.
That's clean.
The one above 231. That clean triggers, you know what else they happen? They get clean stop losses, guys. Clean triggers get clean stop losses. That's why we love them. And so you got that clean trigger here. You got a clean stop loss underneath 22. And so you got a trigger above 231. You got a stop loss underneath 22, and you let it ride. So Lloyd's Banking Group on the breakout of 231 with the stop underneath 22 is the financial trash company that hopefully triggers this week. Mark, what do you think?
Oh, 100%, no brainer.
Tim?
If it triggers, you're in.
Tim?
No, I'm passing.
Tim, don't what?
Tim, see, he sees Genius Brands and he's like,
let's hear him.
I know why he's passing.
I would like to know why Tim doesn't like this trigger.
No, I do like the trigger. It's there. It's definitely qualified. It's the ADR nature of the little gappy stuff.
It's that it's too boring for him, man. It's too boring.
The
for him.
ADR?
That's his way of saying.
Are you kidding me? You vetoed based on ADR? That's why you vetoed that trigger? Hold on. I'm not done, Mark. I'm not done. Hold on. Look at how this lines up historically.
Now, you didn't show me the weekly.
Look, hold on. No, because all you saw was ADR in the name. You were such a brand guy. Oh my goodness. If that didn't say Apple, he was out. Like, he's like, no, it's got to be a brand.
Where's the queen?
Like, look at that trigger on the weekly chart. Look at that stop on a dime. Boom.
You can't say you want the queen. You just said you wanted to trade Genius Brands.
The queen,
you don't get queen back up.
The queen trades this above 231. That's what the queen does.
Dude, you can trade more than 100 shares, Tim, to make it exciting if the ADR isn't enough for you.
You don't have to buy one share, bro.
Tyler.
I like it.
Clean.
Tyler would absolutely. Mark, would Tyler be on my side?
Dude, that is clean as it can be in a hot area of the market.
Tim, you vetoed this. Oh my goodness, nobody would have vetoed this in the. Oh.
To be clear, I didn't veto. I passed.
You vetoed.
All
Okay,
right,
what else
I
you got,
like
Matt?
it.
Veto,
I like
veto,
it. I like it. Let me see if I can get Tim on something else. He doesn't like clean breakouts in the banks. Okay, Tim, I found something that was more Mark. I was thinking about Mark, but maybe I can get you here too. All right. Now this is USWS, US Well Services. It's an energy company, oil and gas specifically. All right. Now, Mark, your take on energy specifically. What's your take on energy here in over the next, say, 2 weeks, 2-3 weeks?
Oh, 2-3 weeks. I don't know. I mean, shoot, 2-3 weeks, anything can happen. Long term, I like energy.
Long term, we like it. 2-3 weeks, we could anticipate a little bit of a drop, correct?
Yes.
That's how I see it as well. So when you're looking at energy itself, there's a few different industries that you can also look at. This one is specifically an oil and gas company, is what it is. Now, I want to say, I don't know what the current market cap of this company is. Let me get you. I don't think it's very much, like $85 million. Yep, $85 million. Market doesn't have a PE ratio. Obviously, a lot of energy companies don't. It's a debt-driven company right now. You also have a company, though, that does have a forward PE ratio. Mark, I think you're going to get a little excited about this one. Mark, it has a 7.54 PE ratio. Okay. Debt driven right now, 7.5 forward PE ratio. Price to book is in the negative. Assets aren't good. Again, its fundamentals are trash. There's no doubt about that. But I don't see anything so disconcerting in its fundamentals that would say that you couldn't find in a ConocoPhillips right now, right? Because ConocoPhillips debt driven too. So USWS fundamentally, I don't have that many concerns. It's a trash company. That's the disclaimer. What I like about this is technically driven, not fundamentally driven. This horrible, volatile retracement, where's it coming into? Right there.
Resistance, yeah.
Well, I'll
Yeah.
give you even one
But-
better. Go to the
hold
weekly
on.
chart.
Yeah, I'll get there, Chucky. Now, you see that little slowing momentum here? That's dinging right at $1. The significant whole number, right, is $1. You're starting to form support right there at that $1 mark. Where does that $1 mark line up into? Historical resistance. So you see that $1, $1, $1, $1, $1. You like that historical resistance zone. You look at that on the weekly chart. You see that W, long-term W formation, right? Long-term W formation.
Plus last week in the
break out?
volatility,
Yeah, go ahead, Chucky.
it came down to the 20 weekly, stopped on the penny.
Stopped
shows
on
there's no
the
fear.
Penny, Mark. Stopped on the penny. Look at that. Let me get in real tight against that. You see that wick right there, Tim?
Mhm.
That is literally on the penny of that weekly, right? So you got a real good backdrop. What that also means, Mark, is I got a real good stop loss underneath that tick there. Got a real good stop loss underneath 91 cents. Clean stop loss underneath 91 cents. Let's come back to the daily chart. Now, this is a short-term bearish downtrend. You're looking at this as that support level forming at that $1 mark. Obviously, we're going to look at this here. You see it within the range there, right? It can stay within this range. You could care less. You really could care less. Coming back out to the daily chart, you're probably looking at a trigger. And honestly, I don't know yet because we're talking about a retracement that's finding support. And so I don't know, but you're probably talking north of 1.1. And so you're looking at an entry above 1.1. Your stop loss is under 91. You got the backdrop of the technicals. You know the support level you're dealing with. Tim and Mark, what do you think of a potential buy the dip candidate weekly style on USWS?
I'll go first. I like it. I think, first of all, I love the developing trend on the weekly chart. Stop loss placement, where do you have it? Just underneath the pivot point?
Under 9.1. It's got to be underneath the pivot on the weekly because that's where you're really looking at supporting that tested 9.1.
Sure.
So it would have to be under 9.1.
Yeah. I do like it. I love the potential reward to risk dynamics when you take it a play like this. This is a dirty little cheap penny stock. Obviously, we're talking about a dollar company, trash that makes cash. It's in this segment for a reason. The fact that you can even map out clear stop entry target on this is a good sign. You know, it does seem to trade pretty well technically. It trended up nicely. It's now been trending back down towards that old retracement level.
Now, mind you, this is not a swing trade.
Nope, it's not.
We're talking about a weekly retracement. That's not how you start swing trade analysis. This is a little bit longer term. This fits Mark's position style analysis.
How deep could I give the stop loss and still make it?
You can go that's the tightest you could get.
Yeah.
Right. That, like I was talking to my daughter, so she's watching this show, my 11-year-old, right? She comes up to me and she says, "Hey, Dad, like when's the next season of this show come out?" I'm like, "Oh, well, they just started the new one on CW. You can watch it on CW." She goes, "No, on Netflix. When's it going to come out on Netflix?" And I said, "Minimum of 6 months." She goes, "Okay, but what's the shortest time frame?" I said, "Honey, think about what I just said." So the shortest stop loss you would do is 91. Now the question goes to what's the max, right? Well, that's based on reward to risk ratio, and position style analysis would definitely be targeting up in the 2 range. Position style would. So you can give that stop loss enough room, but you got to be, I would say, north of 1.140. You got to be north of 1. You got to be north of 65 and south of 91
that gives me some room to wiggle in there. Yeah,
It does.
yeah.
It does. You could probably get it all the way under this pivot if you really wanted to. Like you could get it all the way under there if you really wanted to. But at that point, you're saying it's getting back up here, and I just don't know if that's realistic. So I do like a little bit of a tighter. Maybe you can go under 85 here.
Yeah,
Underneath 85, you got some chop here. You can get under 85. I like the minimum of 90, a minimum stop loss underneath, again, south of 91, north of 65. That puts you into that pivot range. You could get it underneath 85 and feel perfectly fine with it.
I like it. I like the numbers. What's up, Gino?
Mark, what do you think?
No, I like. I mean, and you're seeing a lot of weakness.
Mark walked away and bought shares already.
No, Mark probably checked the option chain first.
No, he's like,
there is no option chain, unfortunately.
No. This is not one of those ones that Mark can do a lot of naked put analysis on.
No, I like it. The 20 weekly bounces off the 20 weekly in these smaller companies like this in this situation. It's a no-brainer for me. It's in the zone. It's got work to do. It's got work to do. And if you get a close below the 20 weekly, so let's say
ugly.
If you close below, that's my stop loss on trades like this. I give the 20 a chance to work. If it closes below it at the end of a week, I usually call her a day.
So Tim, on the trash that makes cash, you don't like the Lloyd's breakout, which is the better one, but you do like this one a little bit?
I like Genius Brands the most, I think.
Genius $3 breakout?
Yeah, the breakout on the momentum. Yeah. And I do like this one. I think this one definitely has the potential reward to risk I would be looking for a trash pick like this.
I just want to bring up the breakout on Genius. It's a decent breakout of 3, but I don't think you would say it's clean, like at all. It's filthy, but it's a good breakout.
It's trash, right? Yeah, and those.
I just don't. I'm trying to understand why you don't like that.
I don't like the daily gaps.
You don't like the what?
The gaps on the daily chart.
Oh,
because
before it was the ATR, and now it's the gaps.
I said ADR, not ATR.
Oh, the ADR.
It's gapping because it is an ADR trade.
Then you cannot trade a international company.
You can't trade Baidu.
No,
can't do it.
Baidu doesn't behave like that.
You're right, because it's tied to a 24-hour market, but it behaves the exact same way from a volatility perspective.
The fact that the gaps, the fact that it has such a clean trigger point, despite that gap situation, I think is telling.
Listen, you guys are on board. That's fine.
Which stock are you talking about?
What's up, Gino?
Which one are you talking about?
We're talking about LYG. And it's got a clean breakout right here above that $3 mark.
Tim, you can't even see that line I'm drawing because that's so clean.
So basically, that is a clean break at 235 is what you're saying?
It is, yes.
Oh boy, let me see a little closer here. Hang on. That's not a bad trade.
Hold on. Let's clear it up a little bit. See if Tim can see that. Tim, can you see it now?
It's clean.
Oh, wow.
Yes. Yeah. Put it on the daily.
Hold on. Let's see how clean we can get it. Let's go.
I'm more excited about our Walmart trigger.
Walmart did look good here this morning.
Walmart's not a trash pick. Does that help?
Yes, I can see the ceiling.
Okay.
Are we knocking on it? We're knocking on the ceiling. Better take a leg higher.
Elon Musk about to send Marty into outer space.
I like your picks, Matt.
Falcon 9 rocket.
It's a nice little handle there.
There's nothing I like more than Gino's handlebar mustache right now, though.
I was waiting to see how long it'd take you.
It takes me about.
I already got the Super Trooper.
Smell that handlebar.
It's like Super Troopers 3.
I love it.
Up.
I love everything about this moment in time. Hold on. Just like we can blow up technical clean triggers, let's see Gino. Oh, that is beautiful.
Gino, that is a wonderful thing. Is that a compromise with your wife that you're going to shave this week, or are you keeping that thing?
Hey, I was watching Magnum PI, the old series, and Then I was watching Tombstone, and I'm like, you know what? That's just darn right cool.
So what character on Tombstone were you looking at?
Wyatt.
Wyatt? It was Wyatt, right? Yep.
Yeah, Wyatt and Doc. Yeah, you can't go wrong there.
Dude, there's no
As
better
Tim would
character.
call Doc Hollihill.
Holy hell. Get out of here. We're done. Let's wrap this show up. Let's start moving into final thoughts. By the way, if you're out there, you're watching our show, we love doing this kind of content. We do it every day, same time, same station. We have a lot of fun while we're doing it. You should be a fly on the wall of some of our internal conversations during some of our meetings when we're talking stocks and whatnot. That's a lot of fun as well. You got to peek into that today. Mark,
you got the PG version.
You got the PG version.
You got the PG version. Yeah, you got the PG version.
Marky, final thoughts for the team out there.
Listen, it's a messy market right now. Like, wait for clear technical signals. And I think if you're like a brand new trader, you haven't traded before, this is a good time to practice virtual trading. Experienced traders, we're going to trade through this. But, it's messy. It's choppy. Just don't be irresponsible. And never forget the story of Archegos Capital when you are thinking about pushing it too far in your margin and your own personal leverage.
Listen, they YOLO'd and they only lived once.
Yeah, I mean, YOLO's great if you don't blow up your account.
Oh, there's plenty of that, though. No, it was a telling story from an individual
You want to live
perspective.
more than one time as a trader, guys.
Because you're going to lose.
Yeah.
You got to remember that. Every one of us are going to lose. We all go through life.
You want to be a cat. You want to have that 9 lives, not YOLO.
That's right. That's right.
You're going to lose at least once.
At least.
At least one time. That's right. Gino, any thoughts?
I'm going to lose on Lloyd's this week, and Tim's going to own me on it.
Well, just do 1 or 2 shares, Matt. You're good.
I'm more nervous about Tim winning that argument versus me losing money.
Hey, Matt, there's people out there that even though it's $2.30, they'll do 1 or 2 shares just to participate, right?
Yeah.
What's wrong with that?
Zero commissions, bro.
Free commissions. You can do whatever you want.
I'll tell you, commissions used to be more expensive than the stock. So
yeah.
Why not? Why not practice? If you're going to practice, 1 or 2 shares, nothing wrong with that. Dip your feet in, but practice using a stop loss under 220 level there.
Yeah.
It's a dime.
Look at Gino waking up, coming out, handlebar mustache, not listening to me and saying 220. I love Gino Port so much.
LA Dodgers baseball starts this week, Gino. I see your hat, by the way.
They going to repeat, Gino?
I'll tell you, man, we love our baseball out here in California. This is the year, man. This is the year.
LA gets too many championships. I can't root for you guys, not at all. Matty, final thoughts for you, sir.
Are we talking about the quality of LA fans? Is that how we're ending the show?
I listen, I love my LA.
Do they even go to games?
Are you kidding me? The tickets here.
No, I know they wear hats, but do they go to games?
Yeah. You can afford a ticket, yeah.
Yeah. No, LA's getting a little LA's definitely getting a little greedy.
You're gonna drop a Gino this
champ.
basketball game. I think you go to soccer, pretty decently priced, but I'll tell you, man, parking alone's $50 here. But yeah. I am going out this weekend to Chicago, Illinois, and that is where the biggest fans are. I'll tell you.
Man,
I don't
Cubbies,
care.
Sox fans.
Oh, the Cubs. I mean, I can't wear this hat out there. Are you kidding me? No way.
Well, it depends where you go in Chicago.
Mm-hmm.
Yeah.
It depends.
Yeah, I'm bringing my Cub hat. I got my championship hat I wear out there.
Everybody's a Cubby fan.
Oh, yeah.
But I like LA's chances this year there, Gino.
Yeah, they got a good squad.
Dodgers got a good team.
Well, let's see how the Rams do with their new pick,
Rams have been shaking it up. Yeah, all the LA teams, they've been shaking it up. The Lakers still looking good. Obviously, they're defending their championship. They've got some competition this year. LA starting the season. You got to be excited if you are an LA fan of sports. No question about it. There's some interesting things happening out there. Final thoughts from anybody out here. Maddie?
No, we were talking sports. I think we're done, bro.
I think we moved into talking sports. I do want to talk more about that dolphin trade with Matt and Mark a little bit later, but we are going to podcast today as well. We do it each and every Monday, the Trading Justice podcast. And while I'm thinking about podcasts, my final thought, simple, guys, the huddle. Over at Tackle Trading in the morning on a daily basis, we've been releasing the Huddle podcast. I will drop the link directly to it. I want you to bookmark the Huddle podcast website. And actually, I'll get the link for it and put it in the chat. Bookmark that website. Make sure that you're finding it on a daily basis. And I'll tell you, this is a lot of fun putting this stuff together, but we got to get you guys to listen to it as well. We would appreciate your support. Subscribe on iTunes, subscribe on your podcasting app, get that download button, automatically doing it on a daily basis. We release it in the morning before the halftime show. And so your day really could be listen to the huddle, then join us in the halftime show, get the news from the huddle, then join us in the show for the analysis. Matt, any thoughts on the huddle real quick?
We're putting a lot of effort into the huddle on a daily basis to make sure you guys get the news you're looking for on a daily basis in a timely fashion without that much color commentary into it. We feel our community can analyze with the best of them, and so we want to give you guys the information so that you can make decisions and to understand what's kind of impacting the market on a daily basis. So definitely, if you are not downloading and listening to the huddle on a daily basis, definitely do that through your favorite podcasting app. You can do it through iTunes, you can do it through Spotify, Stitcher, but you can also just download it through us and subscribe on whatever podcasting app you listen to. Make sure you subscribe so you download the podcast on a daily basis, and those downloads certainly help us get that message out there. So if it's helping you, make sure to go over there to iTunes, give a nice little 5-star review. We love the huddle, and hopefully it finds an audience. Right now, we're trying to get that audience for the huddle.
Just get it up and running. That's right.
Yeah.
Drop the link in the chat for you guys there. Go ahead and click it, get on over there. But outside of that, we're done here for today.
Yeah, just one more thing, Tim.
Yeah,
keeping my eyes, I had the newsletter this weekend. Marquis and I teamed up on it, and we are expecting our probabilities of SMH, the semiconductor sector, to break out. It did not. And if it does, our theory, our projections are if SMH clears 242.5, it might just spark the big caps, Apple, Microsoft, Tesla, Google, Amazon, all to break into that bullish trend that we need to give the market a huge advance. But I'm going to watch it into the close of the hour. We're not going to get that trigger today on SMH, so we'll be looking at that tomorrow and keep you updated. That's it.
Fantastic, Gino. Yeah, appreciate
I
that.
think that's an important trigger there this week in the market, Gino, the SMH one.
Absolutely.
I haven't been interested in semis in a while, and I am this week. So,
well, and I am as well. But I do think if that does trigger, that's significant for discretionary. That's significant for technology.
Anything,
and that's significant for the growth storyline as tied to the bond market.
Indeed.
Absolutely. Be watching those semis. Obviously, they tend to lead a lot of these areas of the market you guys are talking about. So that 242 level is one to keep an eye on. All right, guys, we're out for today. We'll see everybody tomorrow. Have a wonderful rest of your Monday, and we'll talk to you then. See you then.
Thanks, guys.